Welcome to the podcast. I'm Eric Salzman, joined by Kevin Doherty and Richie Bennett. Hey, fellas.
What's up?
Hey, Eric.
Hey, so we got another Saturday podcast.
Yeah, maybe we should switch to here because Fridays seem to have some good, interesting news, like yesterday's.
That's true, right?
And we can get the whole thing in on a full weekly thing, but I don't know. Like, what's his name? Lou Rukeyser, right?
Lou Rukeyser.
He used to do Friday night, right? Friday night after the markets were over. Wall Street Week. And then they'd replay it on PBS on Saturday morning, in case you missed. We can talk about that amongst ourselves at some point.
Yeah, Richie, let's talk about this nonstop bull market.
Yeah, I'm actually broadcasting to you from a high perch today in New York City, in Herald Square, Midtown Manhattan, Midtown West. I'm at this lavish rooftop deck party room, which is pretty nice. Pool tables, old Yankee Stadium bleachers.
Really?
Made it into a nice little party room. Yeah, it's very nice.
Wow.
But yes, so what we're witnessing now, and we talk about this a lot, that ETF, which is the ticker is RSP, Richard Sam Paul, and it is the equal weighting of the S&P. So everybody talks about how the Mag 7 dominates the 500, the other 493 don't really count, blah, blah, blah. Well,
and the Mag 7 again are, what do we got? We got Google or Alphabet, Meta, Microsoft, NVIDIA, Apple, two more.
Tesla.
We did Microsoft already?
Do them again.
Meta.
I just want to, because this is in case not everybody knows what the Mag 7 are. Sorry.
And we don't either.
We don't either.
But they're the big stocks that everybody talks about. Well, anyway, the RSP has driven to higher and higher levels, and it is at an all-time high. So not only are we witnessing now where the Mag 7, whatever they are, and the rest of the market is now bullying forward, like bully, like everything rolling. You know, any kind of news seems to be good news for the markets. It was interesting at the beginning of the week. It kind of was, the news was that what forced things to go higher was Secretary Bessent said a deal was imminent in Iran. And I'm always like wondering, when he speaks on behalf of the imminent deals in Iran, why is it him? Like, he's the Secretary of the Treasury, right? So my gut on that is he needs it. Like, he wants it. He needs this to happen because, then you run into some real troubles if gas prices stay high, the inflation monster is around. He's got to talk with Kevin Warsh now all the time, the head of the Fed. And it came out that I guess, I love how they get these stories too. They have to have some good insiders.
Yeah.
But Wall Street Journal reported, like, Trump has like a hotline to Kevin Warsh, like a hotline, like he's calling him like incessantly, like 4 or 5 times a day. And it's not just to say like lower rates, but he wants to know, like, how's everything affecting the economy in Iran, what's going on? Like, he's asking him questions like, if the strait is closed for another couple of weeks, are we going to have more inflation? Stuff like that, like all the time, which is kind of interesting.
And just
could have asked those questions months ago.
Yeah, that's right. That would have been a good question. Well, and then Kevin Warsh, I'm sure, gives him the great economist response. It depends.
Right. Well, if you do this could happen. And if you do this, that could happen.
Well, it's interesting. You use the word that we love in financial markets when somebody needs something. You use the word need, and we capitalize that, because when somebody needs something, it's usually not good.
No, it's never good. In our other lives of sports investing, I always like to go against the teams that need the game. So usually my favorite time in the NFL is the last 2 weeks of the season, when certain teams are playing for nothing and the other team needs the game to make the playoffs. I will always go with the team that needs nothing.
Right.
because the market, called the point spread, has already baked that in, right? Like, so everybody sits there and goes, so and so is playing that stinky team. They need to win to make the playoffs, but the point spread might be inflated such that they've made that game kind of even, and it works out. So anytime, and if Besant does need this stuff to happen, it may not bode well.
So earnings have come in great, right?
That's really what I think is the real story. The real story is it trades on earnings, right? The markets really trade on earnings. Political matters happen all the time, and they kind of get dusted off. Like, clearly, based on where the market is up, save for a few days in this last, 6 months or whatever, 5 months. I mean, the equity markets in the U.S. don't seem to mind that this stuff is going on in Iran. They either think it's going to be an easy fix at some point, and it's not going to be a big deal,
right?
Including inflation. Like, nobody seems to care about that either.
Yeah,
maybe Kevin Warsh.
Yeah, he's going to have at least a tough couple of 2 years. Maybe the second half of his term will be a little easier, but this is going to be, he's getting those. He must be getting those, and he must be getting those because, Trump is a night owl, right? So he must be calling Kevin at like 2 in the morning.
For sure.
You can't put the do not disturb sign for on your phone for the president.
No.
Well, the other thing, and we've talked about this, I think we started talking about it last week or 2 weeks ago, and it's coming true, is again, we keep saying, watch Japan, right? Watch Japan and watch what's happening over there. And if you remember that the yen got to $1 bought 164 yen a couple of weeks ago, which was like way past their red line of 160. Well, that's usually when the Ministry of Finance gets involved, which is that's the counterpart that kept to Besson's Treasury Department. They do what's called intervention. They come in and they buy yen and they sell dollars. They buy yen, they sell euros. They basically are trying to get, if there's a lot of shorts in the market, meaning people are betting against the yen. If you come in and do something like that, it's a few $1 billion, which in the foreign currency market's kind of a drop in the ocean over a long term. But it basically blows the shorts out. They lose money, and then people supposedly get a little wary about pounding the currency. Now, luckily, the guy who runs our Treasury Department, Scott Bessent, used to work for a guy named George Soros, and one of the most famous currency trades of all time was when Soros broke the Bank of England, when he broke the British pound, betting against it in '92. And it was a windfall. And I believe Bessent was the guy who basically did the trading. Soros ran the fund, but Bessent was the guy. So he knows all about this stuff, which also means he knows that these interventions rarely last a long time without any, they last a couple of days, a few days. And at the end of the day, you've wasted your money. And apparently Japan has wasted I think it's about $75 billion so far in the last few, trying to get the yen back, because it just doesn't work, especially and we talked about this also, is that obviously producer prices, we remember in the United States, we have the CPI, the consumer price index, and then we have the PPI, the producer price index. And that's like wholesale. That's where the companies that we buy our goods from, these are the input prices to make the products that we buy. And in Japan, because oil has exploded and oil trades in dollars. So as the yen has lost value, we could sit there, oh God, look at that, oil's gone up 20%. Here, well, in Japan, it's gone up like 28% because the currency is weakening and they need dollars. So what's happened is they've kept a lid, I believe, on consumer inflation. Like their CPI is like 1.8 or something like that, but the PPI is like 7%. I think we said before that's not a long-term thing. Either the producer price thing comes down or the CPI goes up. And the risk is that if Japan, well, first of all, the long end of the Japanese yield curve, the 10-year, is yielding about 280, something like that now. It got as high as 290 a few weeks ago. Well, what happens there is the differential between, the U.S. 10-year, which is now about 465 right now. It's, let's say, it's, I don't know, 100 and, do the math for me. It's not that great anymore. In other words, you got 465 versus versus 280. Well, a few months ago or a year ago, it was like 4.5%, 1%, or even less than 1%, right? The Japanese 10-year was way down. That thing's going up. And what happens when that goes up is that you have all these Japanese, the Japanese themselves own lots of treasury bonds. And then the big whales, the Japanese insurance companies, the pension funds, they all have been in the same trade forever, which is you go and you get better yield buying U.S. treasuries, get rid of the currency risk, do what's called a cross currency swap, and you end up better off doing that versus buying a 10-year JGB at 0.5%. Well, they're not doing that anymore. Now they're like, hey, you know what? The yield differential isn't that great. So why should we bother taking the currency risk? We can come back here, just buy our own debt. Buy just like, US, instead of buying 10-year treasuries, they'll buy 10-year JGBs and the like. Well, Scott Bessent is the guy kind of in charge of trying to make sure that the treasury auctions run smoothly, that the long end of the yield curve, the 10-year, the 30 doesn't get completely, go crazy because that really affects the economy. So he knows that the worst thing that could happen is that the Japanese have to they have to raise rates the real way that you really defend your currency is by raising rates, right? You raise those short-term rates a lot, and that is what will make the Japanese yen come strengthen against the dollar and the other currencies. So, but if that happens, then if you have the long end of the 10-year of the Japanese curve going up, and then you got the short end going up, that is no bueno for anybody. And then maybe, he sees this on multiple fronts, that this is a big problem for us, and it's a very big problem. And, to quote, I think John Connolly, when he was the Secretary of Treasury under Nixon, and the dollar was crushing, I think it was crushing Europe. And Charles de Gaulle, the president of France at the time, said, he was complaining about it. And he said, and Connolly's response was, well, it's our currency, but it's your problem. And now it's kind of like the Japanese can kind of say the same thing.
Yeah, I think it's, everything, if you're just like a Martian that came down from SpaceX, you would look and you would think there's none of these problems, right? If you just looked at the markets, you'd be like, wow, everything must be hunky-dory because every day there's a new, certainly in the US, there's a new all-time high. Mm-hmm. Yet we keep talking about all these issues, and when does it, does everyone just sweep it under the rug and hope it goes away? Maybe.
Add in the fact that the other big buyers internationally of US debt are the Gulf nations. And with what's going on in Iran right now, and any potential new architecture of the security arrangement there, are they going to be buying more US government debt in the medium term or less? They're going to be spending more money on infrastructure to reroute oil away from the Persian Gulf. They're going to have to spend more on defense to protect all that infrastructure. Maybe this ends up in a deal that they really don't like, and so they want to express their disapproval by not buying as much U.S. government debt. I mean, all this stuff is, as you said, how can you really, the forecasting that is a game for very specific big boy hedge funds. But
right.
It's something to bear in mind when you think that things as they are today are just going to continue as they are today. There's just so much out there that could really change in a big way.
And the Saudis tipped their hand even before the war by canceling the Gulf, right? LIV is no longer going to be supported. So they didn't do that because they were, angry at Phil Mickelson. They did that because they were running out of dough.
The cash burn, yeah.
And they have less cash now for other things than they did on the date they said, or they didn't officially say, but it happened where the LIV is no more. Although it's going to be more, I guess they found another investor, but not the Saudis.
I like that.
I'm feeling this in my heart.
Cash flow as a very sensitive indicator of global monetary flow.
Well, not only that, but I've felt that too, the pinch, because my English Premier League team is Newcastle, and Newcastle is owned by the Saudis, and we're getting killed. Like on the money issue, we're getting killed. They keep taking our best players. Everybody's leaving, and I think some of it has to do with the money.
Yeah, that's what it is.
I mean, I don't understand the whole Premier League thing with the budget and the money and I don't get all that. I really don't understand a lot of that. I haven't, but yeah, that's been hurting us too. One thing we've said, and again, we've said this a number of times, is things like the yen carry trade, this type of stuff, where the Japanese, okay, all of a sudden they're going to make this major, a seismic shift, things like that are going to affect you, like Mr. and Mrs. Mom and Pop America. If you thought mortgage rates were high now, well, they're going to be higher, right? They're going to have seven handles on them. Or God knows, I think in 2023 we got almost at 8% on it for about a month. But this is really going to affect the economy, I think. And what we always say is that I like to refer to this as like, this is the plumbing. This is like, in your house, most of us don't really understand the plumbing too well, and you don't want to, because the only time you have to understand the plumbing is when something blows up, right?
Mhm.
And we said that, remember, in 2008, like all of a sudden you had to find out about the government repo market and all these different facilities, that basically the plumbing of the financial system. If you're hearing about that on the front page, that's a problem, because that, right? It's like, an offensive lineman. If you don't call his name all game, he did a good job.
Okay.
All right. You want to switch gears here, Kevin? Give us a little crypto update.
Sure, there's a pretty big development this week. We've talked about the Clarity Act, and just a quick reminder, this is what the Senate is due to vote on. Congress already passed it last year in the summer, and it's been stalled in the Senate. And this would rewrite the rules of the cryptocurrency regulation and what it's allowed to do and not allowed to do. And the it's now officially, the Senate is not going to vote on it before their August recess. They say we're going to vote on it when we come back. We've talked about this before, and we've been very skeptical that this is going to pass because the Democrats don't want to pass it. And there was actually a very interesting poll that came out the other day. There have been a lot of polls, and I've this may not be something we want to go into in great detail on this call, but the thing with polls, you got to be very careful about how they're worded, who's holding them, who they're asking, et cetera, et cetera. But this poll showed that Democrat primary voters have a very, very negative view about the cryptocurrency industry. And I think that the Democrat senators are certainly aware of that. And this explains some of their lack of enthusiasm about passing this legislation. Not just that the banking industry doesn't want it, but their base doesn't want it either. And this is a big change. Remember the 2024 presidential election, the cryptocurrency industry spent a ton of money to elect pro-crypto candidates, and arguably played a big role in a number of Senate and House races, tipping the race towards a pro-crypto candidate. The big one was probably in Ohio, the Ohio Senate race, where Sherrod Brown, who's a big, big opponent of crypto and had been in the Senate for a long time, got kicked out and a new pro-crypto senator put in. Anyway, it's now very unpopular. And I think the reason is pretty clear, is because crypto has become tainted by all the Trump crypto grifts that we've talked about on this podcast. So the bottom line is the Democrat senators feel they felt that if they were anti-crypto before, and even up until a year ago, because as we talked about, the Clarity Act passed Congress with something like 87 Democrats voting for it. That was a year ago. Now they don't feel like they need to vote for it. So the odds of crypto passing on Polymarket have fallen. They were a couple months ago in the mid 70s. Now they're at 17% likelihood of the Clarity Act passing this year. So it's pretty much dead.
And
Now,
just to interrupt too, so there could be like a big stalling process on the Democrat side to delay and further delay the vote, and maybe hoping that the House or the Senate or both get flipped on election day,
That's
with
right.
the Democrats, then you'll never probably see this Clarity Act again, right? Or at least for another 2 years.
That's right. And so you might expect that the cryptocurrency prices would have fallen on the back of this. They have not. So remember that Bitcoin is its own animal. It's not really that heavily impacted by the Clarity Act. Everything else is. The prices did not budge when the Senate officially punted this yesterday, which shows that people were not really expecting it to pass. The
He's
other
very
thing to
questionable.
realize is that the current SEC and CFTC, they're ready to implement basically all of the things that the Crypto Act would have mandated via legislation that they implement. So there can be a crypto-friendly regulatory framework that lasts the rest of the Trump presidency. The difference is that if it is codified in legislation, then it would carry on to a Democrat presidency as well. The SEC and CFTC can't just willy-nilly go against something that gets passed and signed into law. So that you sign it into law, it sticks forever until and unless a new law gets signed to revise the regulation. Um, so for now, the market seems to be shrugging it off. It's already been in a deep bear market, so
Right.
one might look at this. We've talked about before, a classic sign of the end of a bear market is when bad news comes out, but the price doesn't go down on it. Just
Mm.
like, a sign of the end of a bull market is really good news comes out and the market drops. You're like, oh, maybe this trend is getting exhausted. So that's something to bear in mind, which is quite interesting.
So we could say that the best thing that happened to the crypto industry was when Donald Trump was elected president.
Best and worst,
And
I
the
would
and the
say.
worst thing,
Yeah.
the worst thing that happened is after he became president and made his $1.4 billion windfall.
Yeah.
And because I can't understand why the Democrats would be against. They know it's here. It's not going away. It's very popular to
Yeah.
not make the rules of the road, right? Okay, we got to make the SEC, you handle this part, CFTC, you handle that part.
Yeah.
Done. Like, why wouldn't you do that? And I guess, like we've been saying, you've been saying, Kevin, is a lot of it's just this resentment over, what he did with regards to World Liberty Financial.
Yeah.
Even though we know that the kids run it and he has nothing to do with it. It's
Well, the kids don't even run it. I think they're just a face in a
right.
name as well. But yeah, your point is well taken.
Yeah.
But one bit of good news we should point out, we've also talked about Michael Saylor, our old friend, and his company and his preferred shares, Stretch, STRC. We mentioned a little over a month ago that it was under some serious pressure. These are the securities that pay a dividend, a pretty healthy dividend, up to
12% now, right?
13% now.
13.
Yeah. And they came under pressure because people were worried that dividend was not sustainable. And I think we're pretty consistent on the show saying, you know what, there's pretty good risk reward here. It's yes, there is a level. If Bitcoin gets to 20,000, then Katie bar the door. Where it's no bueno, as we like to say. But if you think Bitcoin is not going to get down to those levels, then they do have the assets to sustain paying this dividend, and the company and the board of directors have made very clear that they're going to defend paying this dividend. And so the price of Stretch, which in a neutral environment where they're paying the dividends and everyone's comfortable that the dividends will continue to be paid, the share price would hover right around 100, which is consider that par, like a bond. And in this period of fear that maybe things were about to change in MicroStrategy's capital structure and maybe they weren't going to be able to continue sustaining this dividend, price plunged down to about 75 and a half a little over a month ago. It bottomed there. And since then, it's posted a steady recovery and closed yesterday just above $95 per share. So anybody that was playing the stretch game, good job. I think at this point, your upside is capped frankly, at 100, because if it gets above 100, they're going to start issuing more so
Right.
that they can buy Bitcoin. So your capital appreciation is capped at another, call it 5%. You can still earn that sweet dividend. If 13% dividend sounds peachy to you, then then that's a different consideration. But as a distressed recovery play, it's happened, and pat yourself on the back, put something extra in your coffee, and move on to the next one.
Well, and we have to give a shout out to one of our loyal listeners, watchers, who made a sizable investment in
Ooh.
Stretch, I believe in the low 80s, and he just closed out his position this week in the low 90s, and he collected the fat dividends while he was waiting.
Well, we should put a tip jar in our
Or
page
I was going
here.
to say, or there should be
Not
there should be
financial
the old
advice
Kansas City
until it
steaks
works.
coming. Remember the
Yeah.
brokers would send us the Kansas City steaks? Like that's
Yeah.
what's coming. You get a nice little cooler of steaks coming your way.
And steak knives. Those were a big one too.
That's right.
Oh, could they not send booze? Did that get
Yeah, it got a little tricky
allowed?
for a while there. Yeah, you could imbibe in booze as somebody who was present, but sending it got to be a little shaky, I think.
Oh, that's a shame. I spent my career mostly in Europe, and there was no compunction against sending booze to your broker. That was
Yeah.
that was a nice part about Christmas.
Yeah. Yeah, I mean, and I think the big worry was that on the slow Friday, everyone was going to start in on the booze at around 11, 12 o'clock.
Oh, that reminds me of a time on a Friday. I will not name the firm, but I was employed as a trader, and it was at 3:30 or 4 o'clock, and they did some big deal. It wasn't even my department, but they invited everybody over to have some champagne. It was a big deal. And my boss looked at me and he's like, "You put the capital of this firm at risk. You will not be drinking anything until you leave this building." And I'm like, right on, right on.
Yeah.
So I was banned. I was banned.
Yeah, it's funny. Like I know there were times when we did have like a bit of a party, but you're still sitting in front of your terminal, and it's like you look at something. All I have to do is click this mouse, hit that button. Maybe we
You're
should.
done.
Maybe we should leave now. Oh man. So yeah, so I mean that's great with Stretch, and and I think that's a good point, Kevin, about kind of are we basically hitting we call the bottom now on, or can the bottom potentially be called on, certainly on Bitcoin now?
And if you go back in the annals, you viewers, Kevin actually gave the advice that was followed. So I don't know if Michael Saylor watches this, but Kevin actually said this is how you fix the Stretch. And we never thought that, or people did not think that Saylor, who runs strategy, and his company had been pushing never sell your Bitcoin, ever sell your Bitcoin. When he got into deep trouble with his Stretch, somebody came to him and said, "Boss, I know you said never, but never's a long time. Maybe you should sell some Bitcoin and prop up that Stretch." And that's exactly what he did.
And his own shares, and
his own money
they've
to
got
work.
over 4 billion in cash, and they've also been buying back Stretch. So
Right.
they announced this new facility where, as it trades below par, they will buy it back. And I didn't see
So
the
they're
number
making
for
money.
last week, but the previous week they spent $75 million on buying back Stretch for their own balance sheet. So yeah, it's seems to be crisis averted. And we're in the slow month of August, but also August is when historically there have been fireworks in markets, because all the bosses are away and the juniors are on the desk, and if something happens that causes people to freeze like a deer in headlights, it can go a little bit further before people get a handle on it. So
Yeah, I remember being a newbie, I think during the currency crisis, late 97, 98, in August, when everything just when long-term capital started blowing up in August.
yeah, Russia defaulted in August. I'm just looking for the exact date because for some reason I think it might be August 8. We might
I
have
think it was August 8th.
Yeah, let's see.
Yeah, because everybody, what do they call them? TKOs? They everyone know the Russian
GKOs. GKOs. So, oh no, okay, it was August 17th.
TK. Well, it could be a TKO, technical knockout.
Yeah.
It definitely got TKO'd.
I mean, I remember a situation where I I I picked up the phone with a very, very, very large hedge fund player, very famous hedge fund player, calling me up on the phone. I'm like the junior guy in the desk, but no one's there, pleading with me to unwind. I think he had some Canadian dollars, so I had CAD swaps on or something. And I'm like, I can't do it. I can't trade with you. He's like, oh God, because the GKOs, it's a separate part of the company, blah, blah, blah. We got and I'm like,
Uh,
I'm like talking to this guy. I wish there was something I could do for you, but I can't. Like they say, I mean, I remember one time getting a call from, I think it was Bear Stearns. They wanted to do some balance sheet trade. And like people came jumping over the wall, like no Bear Stearns, no Bear Stearns, no Lehman Brothers. I guess they were right. They just missed it. They missed it by 20. By like 8 years or 8 years, 7 years before they did blow up. But yeah, that was crazy time. But that was August. I think every time. Certainly, I remember '07 and '08. August was pretty brutal. So yeah, it definitely seems like August is what it really does some bad things happen.
So
wow.
I
Is
think
there any good news to?
Well,
Yeah.
we had to dump some bad news on some cold water onto your good news.
well, equity markets are still at all-time highs or
Yeah.
close to it, right? So that doesn't
It's
matter.
interesting. So the market mover on Friday, if there's a market mover, was the non-farm payroll. The July payroll report came out, and it showed that shockingly that the economy lost 23,000 jobs in July, and I think they also revised the last 2 months down. And rates rally, bonds rallied a little bit, stocks just shook it off. But when I saw this, there was something that shocked me in 2023, and this is something that Kevin Warsh has said he wants to change. Like, he definitely wants to get into this. He thinks the BLS numbers are crap. He thinks we're looking at the wrong things, and he wants to revamp the data that they're looking at. And if there was ever data that should be looked at, it's this, right? These employment reports every month, they're terrible. I mean, it's like a random number generator. I want to tell you how random it is. One of the ways, the major way I believe that the BLS, Bureau of Labor Statistics, calculates how many jobs were created and the unemployment rate and all the other metrics is a phone survey, right? And pre 2020, so they call people up on the phone. Pre 2020, about 80% of the people picked up and gave an answer that month, right? Now, what's happening meanwhile is I don't even know if they have the right phone numbers anymore because no one has a landline anymore. Everyone's a cell phone, but they're probably going off the old list. The I was on a call in 2023, and our economist was getting us ready for the payroll report, and he made a comment. He said, "Now the participation rate has fallen quite a bit. It's down to like 50%." And I was thinking, oh, but I thought he was talking about, there's a statistic comes out, the labor participation rate, how many employable Americans are actually working, right? Or looking for a job. And it's always in the 60s. And I think someone asked the question, like, shouldn't it be like 61? He goes, no, this is the participation rate. This is who picks up the phone when the BLS calls that month. And I'm thinking, like, this is how we're doing this? Like, have a survey and half the people don't even pick up the phone. Now, granted, they end up getting they said in 2 months, they get about 80%. So that's not bad, which is why you end up with a lot of these revisions, because they didn't even talk to 50% of the people that they needed to talk to even put the numbers together. So I don't know. I don't put a ton of stock in it, but it just, to me, it just highlights again, just these numbers are crap. We dealt with this last year with, when Trump went and he fired the head of the BLS, and, it's not good. And I'm hoping that he comes up with better ways to basically gauge the economy, economic activity.
Yeah, and we go back to the elections. These surveys would always be correct, right? Back in the day, it's along the same lines, right? It's the people would pick up the phone from their landline and say, "I'm voting Democrat, I'm voting Republican, I'm voting for Weird Al Yankovic, whatever," right? And you're not getting that in the election things, or even worse, people lie. I like to pick up the phone, like, "Who are you?" "Yeah, I'm going to vote for that guy," and they're not, right? So, like, what do you do with that, right? Like, a lot of these polls are off. So if all this money is spent on this polling, which it is, and there's probably not a lot of money spent on this BLS, right? It's just a department of the government. You got to
Right.
believe they're even further behind, right? They're not getting close. I'm guessing something computerized would probably work better, right? Like
Well,
something.
didn't you
Well,
say, Richie, you were talking about how the hedge funds used to, they'd send some kids down to the, whatever, the local mall and to see how, at certain times of the day, how many parking spots are filled up and everything. And you were saying now you got drones. You can fly over so many different places around the country and look at key things. I mean, people with common sense could figure out a great way to kind of judge economic activity. And
so the people behind the prediction markets, they claim, hey man, this is exactly what prediction markets, this is the value because they will deliver better numbers here. I don't think we've seen it yet, but that's the pitch. That's why it's not just betting on sports, or the stupid thing is the CEO going to say this word, or how long is the national anthem going to be, all that stupid crap. But I that is the value that prediction markets can bring. I don't think they've delivered it yet, but that's interesting to see how that might evolve.
Yeah, and one final tidbit about being man on the street, seeing with my own two eyes. Last night I went to a famous steakhouse, and they're not a sponsor yet, so I won't mention them. But they don't need the help from what I saw last night. So a Friday night in Manhattan in the summer in August, this place was mobbed. I mean, like mobbed. Two of us for dinner. We ate at the bar, right? Because the tables, they took my name and number, and by the time I got home, an
the
hour
table was ready.
an hour later, they texted me that my table was ready. We were done, right? And gone. But one drink, one appetizer, two entrees, $180 with tip. So like no, like, give me a bottle of this, give me a bottle of that, and like stood there, and we all know this place. Stood there in the bar waiting for two people to get off bar stools
Well,
to sit. Like I didn't even have a drink until I sat, right? So, and it was $180. So I think people are still pretty bullish in certain areas, not all, but certain areas.
all right. Well, fellas, enjoy your Saturday, and we'll see you next week.
Have a good
Excellent.
weekend.
See ya.